Welcome back to the daily journal. So, starting off with the high time frame bias. If you hadn't checked my previous video, bias is the same as the day before. We had these equal highs from the previous week as well as the previous day relative equal highs. So, really strong drawn liquidity, and that was validated with the new week opening gap, right? The body respecting that, in addition to the fact that it then reacted off this daily order block. Now going into this daily session, we had swept the low on YM. So technically speaking, Nasdaq has swept this low. You can act as if this is a sweep, right? So over here, and given the fact that this didn't, with YM doing so, this is the stronger asset. So this is where my focus was on for the day. And also going into the session, I was expecting this 4-hour fair value gap to get inverted. This is one of my favorite high time frame models, and the reason is because many times in the past, when I was starting off, I would see a move like this and get caught totally offside trying to get shorts. I can guarantee a lot of people got burned yesterday thinking that this was the top and we're going to get the big financial crash, etc., etc. So yeah, also the fact that we are just in a bullish trend on the high time frames, you have to just stick with that bias until proven otherwise. And so yeah, I was looking for this to be inverted, and I was looking for continuation. So going into the 50-minute chart, let's just rewind the clock. So for me, this is where I got involved, right? So if anybody is telling you that they caught this move, straight up gambling. And the reason being, yes, we had taken out Asia's low. Fantastic, great. All right, there was your hard time frame super liquidity. Perhaps other people's models could give them, confirmation to get in prior to the open. But I was expecting these lows to get taken out. We had no SMT of this low, right? The swing low. So I was expecting a second sweep of liquidity, which is what I need. Had we had that second sweep at the open and then closed above this level to change the state, confirm the change in state of delivery, fantastic. I would have been all over that. But unfortunately, that wasn't the case, and I wasn't going to chase. So I would have liked to have traded this continuation here on this drop. But I wasn't around for that. I went to go and make myself dinner. Let price just do its thing. But I got involved in this, and the reason being is that when I came to check the charts, bearing in mind I'm expecting higher levels, right? So my bias is still intact in the high time frame. But when we went down to ES, we'll drop down to the we're on the 15 year. So I was expecting this wick to get rebalanced, right? Wicks are just imbalances. And so I was looking for this wick to be rebalanced, but we had this change in the state of delivery, right? We had traded from this fair value gap, traded higher, and we had closed above. So this to me is a protected low, but I expect this wick to get rebalanced. So we were respecting the 0.25. Now, when we go down to ES, you can see that we have equal highs, relative equal highs. This is what gave me the bias, on the lower time frame. So to me, this is a protected low, and I expect, now that we are respecting this 0.25 level, I think on the 50-minute charts for ES, it was respecting the 0.5. So at the 0.25, I could see that we also had this balanced price range, and here's that inversion, right? Which we're respecting the 0.5 level. So just going to clean this up a bit. So that was my PDA that I was expecting price to deliver from, right? It had been delivered to. Now I was looking for confirmation to get on the side that this is going to trade up to these highs, which technically are these highs on ES, right? So yes, we swept these highs, fine. If anything, that just meant there was a more bullish move because then you go to double purge, which is the market maker traders concept. So going into this, I was exceptionally bullish, but I needed a change in state of delivery to confirm the smart money reversal for this little mini 1 minute market maker model. So keep your eyes on these highs. Right, so once we closed above, when did that happen? There it is. So I immediately entered market order in, and the lovely thing is that, and this is where all credit to T-Trades, when I used to trade inversions, right? Once we had closed above this level over here, just make this a different color. That's where I would have entered. But look where I would have had to put my stop loss. Like that was my thing. Like you got to put it at the sweep of the low. Sometimes I'll try to get away with tightening up because that's the problem with inversions, is that you have such a large, stop loss. But again, credit to T-Trades teaching me protected highs and lows, because now that we had closed, firstly, we had got the change in state of delivery, right? On this candle. So I can enter on the next one. This is my drawn liquidity, don't forget. But this is not worth it to me. However, the fact that we had come out of this fair value gap and then closed above this is now an order block. This is a protected low. That's where you can put your stop loss. Look at the difference. I've doubled my risk reward. So yeah, straight in at that open and off we went. Now I did hold on to a runner, and the reason being is because remember this was my drawn liquidity. So had it been taken out? No. So the trade is still valid, and of course I've got my high time frame levels, but I mean I'm executing the 1 minute here. So to hold that on for all the way to the top, I took the next one at this high, because if this were to reverse here, I'd expect it to reverse from that high. So yeah, squeezed a little more out the lemon there, and you can see this eventually went to go take that out. Anyway, so there it is. Actually, sorry, this is why it was making sense. I was like, hang on, because I closed this trade over here, put my run over here when, okay, I don't know why this isn't changing. Okay, so this is not, okay, there it is. Okay, there it is. So you can see now clearly how we had these Rudisvika highs. And when we came up to take this out, that's when I got out that second trade, and there's the trade over there. So, yep, really nice. I mean, look at this. I mean, this is my absolute favorite. Market maker models, that is how I trade. It's a big part of this, essential part of my model, the hard time frame model, giving bias with the delivery path. The second thing is the market maker model is delivering, to and from these hard time frame PDAs, and then your low time frame entry models, which come from change in state of delivery. So yeah, that's the trade for yesterday. Hope you guys enjoyed and learned something from this. If so, please give me a like. Feel free to follow. And also if you want to join the Discord where I do live streams, give all my educational content for absolute free, as well as a really great community, swing traders with crypto, and everything else. So yeah, link in the bio. Happy to have you guys on board. Cheers.